Hello, everyone. My name is Gary Fowler, and it is great to be here one more time. I am the CEO, president, and co founder of GSD Get You Done Venture Studios, a premier AI and quantum venture studio located in Santa Clara, California. I'm a 17-time serial entrepreneur. I've been involved in two unicorns. I was on the original management team of Click Software, sold to Salesforce for $1.35 billion, and also Eva.ai, an AI tech company. Love artificial intelligence, cryptocurrencies, quantum computing, tokenization, digital assets. Data is all around each and every one of us. We've got, 49 zettabytes of data. We're inundated. We're in a state of infobesity. So love that. And as it's applied to multiple vertical markets, health tech, industry 4.0, supply chain, you name it. So with that, I've got Pete Lyons on board today who's going to talk. We're going to talk about the role of digital assets in innovation portfolios. And with that, hey, Pete, how you doing today?
I'm great, Gary. How are you?
I'm great. So tell me, what's Culver Military Academy? Because I see you were Culver Military Academy. What is that all about?
Yeah, Culver Military Academy is as the name suggests, a military academy. It's in northern Indiana, about 40 minutes south of South Bend. So I went there for 3 years. It's a boarding school. And, a number of my classmates went on to West Point or Annapolis. For me, I learned enough to know that, the armed forces was not necessarily, something that was in my future, but it was a great college prep experience, and I can do a great spit shine even today.
Hey, Pete, was it tough? Did you have to salute everybody? Was it that? Did they have protocol?
Oh yeah, I mean it was inspections, marching, parades. For a couple semesters, I was the cannoneer. So we had this 105 millimeter howitzer that we would fire every morning and every evening when we take up the flag and bring it down again. So it was all pretty exciting, but definitely a lot of discipline, a lot of just a lot of attention to detail.
Oh, that's great. And did they have certain hours you had to study? Did they say, from 5 to 7 study time? And was it that kind of deal, or was it?
Yeah. Actually, it was closed quarters. CQ ran from 7:30 to 9:30. And then from 9:30 until 10, everyone would basically, brush their teeth, make calls home. There was one payphone on the entire floor in the barracks. And my parents were living overseas at the time. So it was always a struggle to be able to communicate with my folks from,
That's amazing. And was it lonely? Was it lonely being there, Pete, being in a military academy, being away, or did you get accustomed to it?
They kind of run you through this whole, first year cadet plebe system where you really don't have any time to feel homesick or lonely. You're literally they got you busy doing all kinds of menial tasks. And on top of that, you're also, if you're playing sports, you're doing sports, you're also in class, you're studying. So you kind of acclimate, out of necessity, really.
No, that's great. Wow. I always was wondering about that. I never myself have been in the military. So I know that, one of my uncles went into a military academy when he was in high school because he was a little bit wild. So he got put into a military academy, and he didn't have good things to say, actually. The one he went into was not one of the ones that you're going to learn a lot. It was more disciplinary. But he came out and he became good. He moved forward. So you went to Purdue, you got your bachelor's in economics, and you moved forward with that, or you got your degree, your certificate from George Washington. So you were in with your father. You said you were in Saudi Arabia. You were one of the Aramco brats.
Yeah. So I before Culver, I lived in Saudi Arabia with my parents and my brother and sister, and we were living on this expat compound in the eastern province of Saudi Arabia. Actually, my last year there, my ninth grade year, before heading over to the U.S. to go to Culver, it was the year of the Gulf War. So Dhahran is where a large large American and Saudi air base is located. So it was in the thick of it as far as Scuds and Patriots and all that kind of thing. But I was there full time really from 1982 until 1991, and then would just go back a couple times a year to visit my parents.
Wow. How was it during the Gulf War being in Saudi Arabia? Were there challenges? Was it, were people anxious? How was it?
I think, when you're 14 years old, it's kind of an adventure. Like, it's not every 14-year-old that gets issued a gas mask that they have to like practice using and taking on and off, and there's drills for Scud attacks and all that kind of thing. So, it was an adventure until the first actual Scud attack, when the air raid sirens went off and you just had to get to an indoor room, put on your gas mask, and I'll tell you, the explosions, there were so many explosions. The Patriot would explode as it left the silo. The Scud would come in at like Mach 3. There would be a sonic boom, and then there'd be a detonation when the Patriot would hit the Scud. So each one of those explosions was like the loudest clap of thunder you could possibly imagine. So yeah, it got real.
That is an experience. And here, the good thing is here we are right later. So that's a amazing experience. So you worked with the UN. You did your internship, I understand, at the UN Office of Information Systems. And, you can see a progression, election systems, public service kind of things. Looks like you've done some research analyst. And, how did you move from that to working with digital assets and in portfolios? How did that come about?
So my first job out of school was at Motorola. So I got my feet wet early on in this sort of like transition to mobile, to cellular networks and technology and that sort of thing. And even when I went to work in finance as an analyst, I brought a lot of that background in telecom and cellular communications. Basically, seeing that with these kinds of, this overlay, this kind of digital overlay on the world that happened to be wireless, it really felt like something new and important was happening. New business models were emerging. Phones were every year, you'd get a new phone in your hand and it would just be much cooler than the last one and with new capabilities. And it was, 2G, 3G, 4G. But I think what I took away from all of that was just the power of network effects, right? So as everyone gets a mobile or cellular phone in their hand, the network effects really sort of take over. And that's the thing that I noticed about what initially drew me really to crypto was that the networks and the network effects, and how, for example, with Bitcoin, the more people using Bitcoin, the more miners on the network, the more secure the network becomes, right? And then with Ethereum as well. So at the time when I officially left and sort of jumped headlong into crypto was 2018. I was at the World Economic Forum and really just saw the opportunity to jump into the future essentially, and took the chance on joining a startup that was tokenizing digital assets, and really haven't looked back since. And I think that in some cases, when you're in the industry, it's easy to assume that everyone else sort of understands or shares your enthusiasm for some of the technology. But you know, it's always important, I think, to keep in mind that education is really important, and really bringing people along, and just not taking for granted that people know what the difference is between Bitcoin and Ethereum and, you know, any other sort of digital asset. And it's something that we see, like, you know, politicians and you know, people in the sort of public domain, a lot of times they don't really understand. So I think, you know, it's great to come on your show, and I think it's important because there's a real outreach that's necessary to help people grasp what this is.
Well, how do they know? I mean, you got you know, Elon Musk out there pushing was it Dogecoin
Yeah.
and you know, up and down and in and out. You know, Bitcoin's gone from 60 some thousand down to 30,000. Ethereum's gone from what, 4,000x to 2,100. I mean, it's like a roller coaster. So, you know, the thing is, one is, you know, what's driving it up and down like that is because somebody tweets or somebody you know, talks publicly about the situation, or is it a situation that they're, you know, on one side, I would think that they become really part of the fabric of society. On the other side is there's so many wide swings with this things that
Yeah.
it seems a little odd. You know, it seems a little unusual.
Yeah. I mean, I think you've put your finger on something really important for people to understand, and that is volatility, right? So, you know, different things can drive the swings in price. I think, for example, with Bitcoin, uh, most recently, and to some extent Ethereum, I think what we saw with China, essentially, like, you know, switching off mining in the country, banning it, which, you know, before that, I think something like 70% of the compute power securing the Bitcoin network was coming from miners in China. And for the government to suddenly just say, okay, we're done, that's, you have to, you know, you got to leave if you want to continue doing this, you know, that has a material impact on the, not just the, you know, people that are investing in Bitcoin, but also the Bitcoin miners themselves. In order for them to set up shop in a, you know, another country, there's substantial amount of capital required. So I think what we saw driving the initial sort of May through June downturn in the price was really a lot of the miners and a lot of the people, you know, needing to adjust to these new realities in China, having to have capital on hand so that they can, you know, invest elsewhere.
Yeah, absolutely. So let's go down through Pete. Tell my audience, because a lot of people don't understand what a Bitcoin miner is, you know, or how they operate, and where does it come from? What are they mining for, and what comes out of that mining? So it'd be interesting to, because I've heard that question many, many times, and it's hard to put your finger on it. Are they taking something from nothing? Is there part of a Bitcoin out there and you're putting it together as one? Can you just, you know, take a minute and explain what a Bitcoin miner does and why they're important?
Sure. So I think it's important to, you know, have the appropriate sort of like conceptual framework. And I think a lot of the sort of early kind of language that emerged with Bitcoin really sort of makes it very analogous to gold, right? So in the way that a gold miner would have to go and extract gold, there's a lot of work, it's very intensive, you know, but there's ultimately a finite supply of gold. And with Bitcoin, you have these miners, which are essentially people running these very intensive computing stacks that are they're competing with other miners around the world to try and solve these these basically math problems, right? That the reward for being able to solve the math problem is essentially a Bitcoin, right? There's an award to the
They're
miner.
solving math problems, and the reward is a Bitcoin. Who gives them the Bitcoin?
The Bitcoin is issued by the Bitcoin network. It's all code, essentially.
So they're going down through, and solving the math problems. So places like, from my perspective, Israel, Russia, China, Ukraine, Belarus, where you got people that really are great at math, you would think that they would be right at the forefront of this, because if using math to be able to mine something, that would be it. But who's the one that put it out there to be able to mine? Where does that come from? Whose idea? And so this Satoshi
Yeah.
that we talk about, who is this? He's like Zorro. I mean, it's is it a person? Is it a number of people? Who is this mass person Satoshi? I mean, is it just an idea to create this thing? And then we'll talk about how it's really the role of digital assets in innovation portfolios. But who is it? What is
Nobody really knows, to be honest. There's speculation, but this Satoshi Nakamoto basically just kind of emerged from nowhere with this white paper that has since been sort of studied and read and reread by millions of people around the world. But I think the idea behind it was that you could essentially take trust out of the equation and just design incentives in such a way, and design software in such a way that was decentralized and would provide the incentives for essentially people to be able to use a form of money that could not be debased, that was not inflationary, that there was a finite supply. So I think it was really a response to the 2008 global financial crisis.
I mean, and COVID and everything else, right? Because we're becoming closer around the world. The borders are being broken down. So I get it. Okay, get that on Bitcoin. But tell me, there's a lot of coins out there today, right? And you see these huge fluctuations in some of these coins that come out. They go through the roof. People in Reddit and millennials and others jump into them. They go up, they go down. What's the deal? Which one is right? And if you're having a role of your digital assets in your innovation, and investor portfolios, how do you know which one to pick?
Well, I think for starters, it's important to consider the network effects, right? So with 2Prime, which is the fund that I am working for, we deal only with Bitcoin and Ethereum. Those are the two largest by market cap. Also, you have to consider what are the teams that are sort of behind the scenes developing and contributing to the code. And with Ethereum, I believe you have something like 3,000 active monthly developers. Because it's not just the Ethereum core protocol, but there's also many projects being developed using the Ethereum network. I believe Bitcoin has somewhere between 350 to 450 active monthly developers.
Wait a minute, it doesn't make any sense. Ethereum's got a lot more, but the price is a lot less.
Well, I think you have to look at the total market value, right? So the total market value of Ethereum is roughly, I think, 25 to 30% of Bitcoin. And there are many that believe that, it's inevitable that the market value of Ethereum will flip Bitcoin. In fact, there's a name for it. They call it the flippening.
Well, I've never heard that, the flippening.
The flippening.
Sounds like a dark movie.
Well, I think Bitcoin, for what Bitcoin does, is very straightforward, very, it does what it does it well. There are a lot of moves out there to sort of shift to more sustainable sources of energy. Ethereum is also moving away from proof of work to a proof of stake model, which is something like 90-something% more energy efficient than proof of work. But I think what's interesting about Ethereum is just the sheer amount of real world use cases being built on top of it. And the sort of like additional kind of like second layer scaling protocols that are really going to allow Ethereum to have, transactions per second on par with like the Visas and the MasterCards. I mean, it really, all of this is kind of happening incrementally, but with 3,500 developers, I mean, I like to think of the brain power behind these protocols. And I'll be the first to admit that, these are much brighter people than me. And the fact that you have 3,500 of these people working on diligently, contributing to this kind of like project.
Yeah, that's huge. Who's paying them, Pete? Is it Ethereum or are they independent? How does it work?
In some cases, people are just, contributing, to the open source code in a way that's, more sort of like just community based. Mm-hmm. Others, there are incentives for developers to provide, their expertise. I think a lot of people want these protocols to succeed. Mm-hmm. And in many cases, a lot of these developers also themselves hold a good amount of the underlying token. So there's, ultimately blockchain, Bitcoin, Ethereum, it's all about incentive design and structuring. And when you can create a system where the incentives of the brains, behind these systems aligns with the value being created by these systems, I think, there's a lot that can be done.
Yeah, it's interesting that you say there's only 550 developers for Bitcoin, but the market, the sheer size of it is what, 3 times as big as Ethereum's. It's interesting. And when do you think it's going to catch up?
Well, I think
You're smiling a little bit, Pete. You were smiling there for a second.
Yeah. Well, that's the $1 trillion question. Personally, I think within the next year, by this time next year, I think we'll see Bitcoin and Ethereum market values much closer. When it actually flips, or if it actually flips, anybody's guess. But I just think there's so much innovation coming down the pipeline on top of Ethereum that, and so many changes to make it more energy efficient and make it execute transactions faster, and all these things I think ultimately are accretive in value.
Yeah, no, I agree with you. What about these other coins? How do you know what to pick? There's so many out there. You don't know from day to day. There's all kinds of different coins, and their values go up hundreds of percent sometimes. How do you know which is what and what's, the other thing is the Dutch tulip phenomenon. Is it a Dutch tulip phenomenon for everybody's jumping on the bandwagon? Or is it the fact that the market's wide enough for those additional coins to come out, those additional digital assets?
I think there's a whole range of coins in terms of like, what they're intended to, what sort of services they're intended to support, the teams behind them. I would say for your first question about how do you know which ones are worth looking at, I would say first look at like how many active monthly developers each of these protocols have. Now, I don't want to, rain on the Dogecoin parade, but, Dogecoin, for as much market cap and sort of meme power as it has, not many active monthly developers, right?
Yeah, you got it.
So who fixes things?
I like that. Average monthly developers. It's the first time I've heard that. So you got to look at that. So audience understand. Look at how many developers they have behind.
Yeah, and a lot of the information is freely available. You can just, if you go into Google and you say like active monthly developers for, whatever coin you're interested in, you can actually see like pretty up-to-date statistics. And I think that's the first place to start, because that gives you a sense of like, again, it comes down to like who's behind these projects, and do they believe in it?
Yeah. Who's behind or not behind, right?
Exactly.
All right, super. And so, and we're coming up to the top of the hour soon. in 3 minutes, so I want to make sure you have time to close. So if you could close with that next question, and then a little bit about what you see over the next year and how can people reach you.
Sure. So right now, I think the volatility in crypto is sort of creeping back up again.
Mm-hmm.
And that's sort of more par for the course, I think, for what everyone's used to. The last month or so, volatility was really narrowing, which, it kind of is it's not what you want with crypto. I think some measure of volatility indicates a more healthy, sort of, lively marketplace. But we see volatility starting to come back. The fund that I'm with, 2 Prime, we actually are able to trade and capitalize on some of that volatility. So we buy Bitcoin and Ethereum, and then we trade options on the Bitcoin and Ethereum and different option strategies that can generate returns.
Mm-hmm.
It's about managing risk and wealth preservation. So a lot of groups that have accumulated Bitcoin or Ethereum over the past few years, now it's a substantial amount of wealth. They don't want to lose it, right? They want to be able to grow it, but also protect it. So if we're able to take out 50% of the downside, that's great. I think that, as volatility comes back in, these types of active management strategies are going to be important. And we're about $100 million under management right now. We expect that to double by the end of the year. And ultimately, I think we're trying to make crypto a little bit more boring,
mm-hmm.
but allow our LPs to sleep better at night.
No, that's great. And how do people reach you, Pete? What's the best way to reach out to you?
So they can give me a call or just send me an email. I can provide all that information.
You can give it to the audience right now. What's your email address?
Sure. My email address is pete.lyons@2prime.fund.
Pete.lyons@2prime.fund.
That's it.
Pete, I want to thank you so much for taking time out of your busy schedule to join my show today. To my audience, thank you once again. This is our 3rd time this week for GSD Presents Silicon Valley AI and Tech, and I'm your host, Gary Fowler. Stay tuned again for next Tuesday. We'll have another exciting adventure for each and every one of you. I want you to stay safe, stay happy, keep smiling, and stay healthy. So till then, talk to you again next week. Again, Pete, thank you for joining the show. It's really appreciated.
My pleasure. Thank you.